Hi, welcome to this update on the banking crisis or potential banking crisis out in the Eurozone. I'm Keith Cottrell, a financial trader and analyst of the markets for some 20 odd years. There's certainly a very interesting picture developing here, and at the weekend the Deutsche Bank chief economist came out and said that 150 billion of bailout of money was required to bring stability back to the European banks. Well, according to the article, there's 360 billion euros of bad loans and growing worse by the day. Well, no surprise there. But what's interesting is there seems to be two sides to the camp now. And we first got, as Gerald Celente, the brilliant trend forecaster, calls the International Mafia Fund, the IMF, headed by Lagarde, were concerned about global contagion from Italy's bank crisis, forecasts a 2-decade-long recession. So really cheery stuff here from Lagarde. And also in the article she talks about the GDP growth being downgraded, and this is the third largest economy in Europe apparently. So we're still not out of the recession or the emergency interest rates that we all went to in 2008, but they seem to paint a very rosy picture of the European project. But underlying this, of course, is the systemic possibility of banks going bust, and in particular the first of those to be the Italian banks. I'll come to Japan in just a moment. So Italy needs bailing out, and say the two sides to the argument is that Lagarde wants to use public money to finance the banks. If we just move down here, I'll just find this for you. It's quite a lot of information in all of this. And it says, finally, in keeping with the tradition of having political involvement, Lagarde sided with the side of Renzi, the Italian Prime Minister, and against Merkel and Dijsselbloem, both of whom have denied Italy's repeated pleas for bailout, saying that if the EU-wide stress tests show that financial stability is at risk, there is scope for Italy to use public money to recapitalise its banks. And the head of the IMF mission to Italy said in a conference call. And what you've got is the other side is Dijsselbloem, I think is how you pronounce him. He's the head of the Euro group, and he said he will resist taxpayer bailouts very strongly. And I agree with him. You see, we wouldn't have this problem now if we'd have let the banks go bust in 2008. They've received huge amounts of taxpayers' money for generations to come to pay back, if it can ever be paid back. And he's saying that the legislation that was put in place in Italy and around the globe, which I've spoken of before, is that they should use depositors' money to bail out the banks. It's mismanagement by the banks of depositors' money, and it shouldn't be taxpayers' money that bails out these Ponzi schemes and the incompetence of the banks. So this is what's turning into a bit of a catfight now in Europe. We've got, as I say, Lagarde on one hand, saying that we're siding with the Italian Prime Minister and wanting a public bailout of the Italian banks, and then you've got Merkel and Dijsselbloem who are saying no, it should come out of the banks' customers' accounts and also the shareholders in order to support these banks. So that's the latest with regards to the Italian side of things. But what's even worse, of course, is the Deutsche Bank situation. And as this chart shows, there's been an epic problem brewing with the Deutsche Bank. And again, it's interesting how the Economist comes out at the weekend from Deutsche Bank, and also the CEO the weekend before, saying that everything's fine with Deutsche Bank. And as I've often said, as the saying goes, don't believe anything until it's officially denied. We don't have a problem, we're well capitalised, all the usual rhetoric that you get when a bank has major problems. Otherwise, they wouldn't be coming out and trying to tell the market they were fine. But as this chart here shows, Deutsche Bank has major problems. And in particular, what's important is the 52 trillion in derivatives. This is a major problem for this bank. And things turn really bad, then someone's going to lose out badly in this deal, because if you can't pay off the gambling debts, then there's a major problem. And even Warren Buffett has said in May of this year derivatives time bomb may elude auditors' reviews. And again, this is interesting actually, did a bit of research, and Greenspan way back in 1998 said this.
Regulation of derivatives transactions that are privately negotiated by professionals is unnecessary.
So he was saying that regulation of derivatives is unnecessary between professionals. Interesting that saying this back in 1998, nearly 20 years ago, we now find ourselves in a situation where Deutsche Bank has 52 trillion. The total around the globe is 1.25 quadrillion in derivatives. So the least of Italy's problems are the 45 billion that it wants, because the Deutsche Bank situation is blowing up quite nicely. And not too far down the line, we should see more and more of this actually appearing in the mainstream news. It's been kept under the radar for some time, but now we're heading towards a situation where we've seen a 40% drop in the share price. I think it's 48% drop in the share price this year alone. 19% of that coming following the Brexit vote here in the UK. But again, that really is a non-event, because sitting on 52 trillion of gambling instruments is going to be their biggest problem, and not being able to service that debt. The European groups are aware of this, including the IMF, which said that even they came out recently and said they had a systemic problem. The Federal Reserve only last week said that Deutsche Bank has not passed the stress test. And again, following on from that, and I think you'll find a lot of American banks also, because Yellen then gave the go-ahead for them to actually buy back their own shares. And you wouldn't be doing that unless you wanted to support the price and also ensure that the CEO's bonus was fully intact. So we have a financial banking mess brewing in the background, which dwarfs what really took place in 2008, and they're doing their damnedest to keep this Ponzi scheme alive by, again, using taxpayers' money. But as I say, Dijsselbloem and Merkel are resisting it at the moment in Europe for the bailout of Italy's bank. And to finish off, let's just go over to the Far East, where printing money is well and truly alive, and will be by the end of the month. This weekend, or last weekend, saw a secret visit by the former head of the Federal Reserve, Bernanke. Went over to see Abe and Kuroda and had a word in the boardroom, as it were, about helicopter money. Now, helicopter money is basically when you start to drop cash to the consumer or to the citizens of a country in order to get them to spend to create hyperinflation, is what they're looking for in order to pay off or reduce the size of the debts that they've incurred. So far, QE has failed miserably. It's only created bond bubbles, stock bubbles, housing bubbles, and no inflation. The inflation being obviously contained within those three bubbles, and not with economic growth inflation that you would normally get if the money actually made its way to the actual citizens to borrow and then go out and spend. So the last resort from the banksters is going to be giving money to citizens, and it looks like Bernanke has had a word, as I say, in the boardroom with Abe and Kuroda, and by the end of July, I think it's July the 29th, we should be getting some form of announcement, another 10 trillion of yen being used for bond purchases and all sorts of other things. Whether they actually do start giving money to the citizens remains to be seen. Personally, I hope it doesn't go ahead. The Swiss had a referendum on this a couple of months ago and decided against it, which was a sound reason not to, because it's the last thing you want to do. So having single-handedly screwed up the American economy and sending the borrowings 10 trillion higher under his stewardship, Bernanke was now sent out on a mission to have a word with Kuroda and Abe. Why? I do not know. I can't understand why they didn't send Yellen. It defies all mystery to me why he's gone. Probably because it would look bad if Yellen was sent. She was interfering with overseas fiscal issues when they can't really deal with their own. So Bernanke was no doubt told there was a ticket at the airport and off you go, son, and see what you can do. So let's see what happens. All of this will unfold on the 29th of July. It will be interesting to see if they are going to print money and give it to their citizens, which is what's known as the helicopter effect there. You'll see that helicopter money. It's certainly going to be interesting. This has actually sent the Treasury bond prices or yields higher in the last couple of days as well. You can see there the 30-year bond spiking on the news that Bernanke has been out to the Far East, which is good because at the moment the 30-year bonds are in a slide to the downside, and it's very important you keep an eye on this as well, because once the 30-year goes negative, and who says it can't, because this morning I see that the German 10-year has gone to zero. So you can see that by predicting the future, all you have to do is look at the further out bonds, and as they decline in the rate of return that they're offering, you know that we have a major problem. So keep an eye on the 10 and 30-year US yields, because they're a very good indication. Who wants to buy a 30-year bond that was at a negative rate? Keep the bond for 30 years and then pay for the privilege of doing so. Anyway, so that's about it. The update with regards to Italy, and just to summarise, we've got two camps now: the International Mafia Fund, who want to use public money to bail out the Italian banks, and Merkel and Dijsselbloem, who doesn't, and it should be a bail-in, using the depositors' funds in order to do that. Of course, there'll be riots and a run on the bank if that is allowed to go ahead, but that was the legislation they put in place. That is also here in the UK as well, if you didn't know. 2013, the legislation came in for building societies as well. Anything over £75,000 will be confiscated in the event that the bankers need it. That's the Italian side. The Deutsche Bank situation, the share price has risen over the last few days, but the problems remain, and in particular the 52 trillion that they have in derivatives. And as Warren Buffett says, we have a systemic problem there. The Federal Reserve also saying that Deutsche Bank does not meet the stress test. And of course, the chief economist coming out and saying we need 150 billion to bail out the European banks, and ours in particular, no doubt, was muttered in there somewhere as well. And then Japan, watch this space carefully. We'll see what happens over there following the sainted Bernanke making an unofficial and secret visit, that's no longer secret, to have a word in the boardroom with Abe and Kuroda. So I will leave you with the stock markets making new highs as the Ponzi schemes continue to remain intact, funded by Carney, Draghi, Yellen, and all of the central bankers around the globe, making these markets appear to be normal when there is absolutely nothing normal about them. How long it continues, who knows? But one thing's for certain, with the debt mounting in the background, the banks in Europe having systemic problems, I don't think it will be too long before we start to see more of 2008 being revisited to 2016. So on that cheery note, I will leave it with you. I will record more videos on this as events unfold, and more anon. Thanks for watching. See you in the next one.